This is video 2 in the series. In this video, I will discuss credit score, background, and criminal history. Now, first let's get the small ones out of the way, which is the background and criminal history report, which pretty much looks into the borrower's history to see if they have a criminal history, if they've had foreclosures, bankruptcies, and the like. If somebody had a criminal history, typically we will shy away from lending from them. Then again, it's not a general rule. It depends what their history was, how long ago it was, if there's a good explanation. If somebody had a criminal behavior when they were 19 years old and today is 55 years old and has turned their life around, and the foolish thing they did as a teenager is way in the past, it may most likely not stop them from us lending money to them. Foreclosures and bankruptcies is basically to see if this person ever was trusted with money and foreclosed on a property, did not make their payments. If somebody had a foreclosure, so long as it was long ago enough and the explanation of what happened is a valid explanation, say 2008, the crash, the real estate crash, something like that, that may be a factor that we will take into account and may lend to them. Bankruptcies is basically where somebody said, I cannot pay my loans, my debt is too large, and therefore I'm filing for bankruptcy protection. If somebody had a bankruptcy, if it's long ago enough in the past, again, with a good explanation for what happened, we very well may lend to them. But we will look for criminal, foreclosures, and bankruptcies in their history. Now, on to credit score. Credit is basically where an institution, whether it's a car company, a bank on your home mortgage or investment property mortgage, whether it's credit card companies, any institution that will offer you credit or money, let's see this person's history. Have they paid? Have they paid in a timely manner? Have they been delinquent and not paid their debts? So the credit score is made out of, first of all, how many people have trusted them, over how long. If somebody has 10 people who trust them, 10 institutions that trust them, but their history only is 2 years old, they haven't had any accounts with any financial institution older than 2 years, so that's a good picture, but it's not as good as somebody who has many over 15 years. The more detailed and longer and larger your credit history, the more information is available. Now, the credit score goes from as low as 350 to as high as 850. The lowest I personally have seen has been 444, and the highest I have personally seen has been 820. Now, a good credit score is over 650, a great is over 700, excellent is over 750. 6 to 650 is fair, below 600 we tend to shy away. And interestingly, the loans that I have originated that have been the most problematic have been with people who had a low credit score. People typically do not change. Sometimes people go through things in life and they do turn it around, but typically if somebody's credit score is 580, we are going to shy away from the loan. It's 580, it may be for reasons out of their direct control, but typically they've had a hand in what has happened. They didn't make payments, they were delinquent, something happened that they ultimately neglected, and therefore we don't want to be in that position. We are typically looking for a borrower with a 650 plus credit score. We'll go as low as 600, providing we have a clear understanding of their credit and a letter of explanation potentially for why their credit is that low. Now, when we do a credit pull, you may do a soft credit pull from a company like Credit Karma or your credit card company. There's numerous free credit reports out there. Typically, our credit pulls, which is done from a hard credit pull, will come from all three of the credit bureaus, which is TransUnion, Equifax, and Experian. And typically our number that we get is lower than the free credit pulls that you'll see. So if somebody's free credit pull is 720, doesn't mean that it won't be 690 when we pull. Now we will take all three credit scores, the one from TransUnion, the one from Equifax, and the one from Experian. We will combine them all and divide it by 3, and that will be your average credit score, and that is the score we will be giving the borrower. Now, credit is a very important number for us to understand. It's not the only number, because if a person is buying a good property and they want a small enough loan versus the value of the property, the credit may not pay that much of a aspect in our decision. Or if the person has great experience, but their credit's not that good. But it is a snapshot that does provide us some clarity about our borrower and what our expectations can be of the borrower or investor in the real estate deal.